As you can see, our mission has been to keep homeowners in their homes. That's our primary mission. And what we discovered was to do that, there's a lot of work involved, and oftentimes we are not able to accomplish that. So we end up with these properties. So basically, we end up with two strategies going on. We are taking homeowners that we bought their discounted mortgage, and we are modifying them, and we are modifying them where we are making a very nice return on that current investment. So let's just say, as an example, we bought a loan and it cost us $20,000. We oftentimes, I mean, we have an example of one where that's exactly what we paid for it, and we're getting a payment of $600 a month. So you run that $600 a month, and you start to see that's a substantial return on that investment just as a reperforming loan. And what that doesn't indicate, though, is we bought it for $20,000. The loan is still $60,000 on that home. So not only are we getting payments of a good return on our current investment, in other words, the money we put out there, but we're also, when that homeowner, because as we all know in the United States, the average time a person keeps a home is around 5.7 years, that person is going to most likely refinance when they get their financial condition back. They're going to refinance, or they're going to sell their home. So when that happens, now they've got to pay off the balance of that loan. Well, there's 22 years left on this loan at $60,000 that 3 years from now it may be, instead of 60, it may be only 52. So they owe us $52,000 while we were making a nice return all these last 3 years. And that $52,000 was something we paid $20,000 for. So suddenly you can start to see that we're doubling our money on that particular loan. So that's one piece of the puzzle. The other piece of the puzzle is when we find that we can't keep the homeowner in the home, that they've just moved on or whatever their situation is, we work with them to exit out of that home in a way that is beneficial to both of us. In other words, we don't want to harm them anymore. They've already gone through enough pain. So we're willing to do a quiet exit strategy where they just basically hand over the home to us. They sign over documents saying, here it is, and we take that home and now we're capable of selling it. And what we will do is we will look at all sorts of strategies in selling that.